Hey everybody, it's Doug Schauf with the Make Maine Your Home team over at RE/MAX Oceanside. In this week's episode, we're going to talk about how to get approved to buy a home. So let's do this. All right, everybody, like I said, we're going to talk a little bit about how to get approved to buy a house. I'm going to throw on my glasses because we got lots of notes for this. This video could be super short just by saying, hey, you should reach out to a good lender that you trust, and we know a couple, just let them deal with it. But we'll fill you in on a few other details. That is really kind of number one there. I would definitely find and talk to a couple lenders. Find somebody that you trust. If you know somebody, work with them and they can walk you through the process. And it's very, very simple once you got that good lender to kind of handhold you through that process. I'm going to shine some light on a few things for you that can help you out, like as you're talking to your lender, so you're not like totally in the dark. The mortgage pre-approval process, like when you're like, hey, I want to buy a house. The first step is to figure out how you're going to do that financially. There is an approval process that you got to talk about. So you're going to go and you're going to talk to your lender. Then you're going to do a mortgage application. And once you do that mortgage application, it's just like filling out a loan app. Kind of like when you buy a car, you got to fill out an application. And then the bank is going to ask you for everything under the sun. Be prepared to be asked for everything. All right. Because a lot of times we get a lot of clients going like, geez, do they really need all that stuff? Yes, they do. There's a lot of regulations around getting it on mortgage. They're going to ask you about your income. You know, if you have a lot of assets, maybe retirement accounts, things like that, they're going to ask you for statements around that. They're going to need confirmation of your income, like pay stubs. If you're self-employed, that gets a little more complicated because if you're self-employed, you're going to need a couple years tax returns, maybe even a profit and loss statement for the current year, depending on how deep in the year you are, because they really want to make sure that your income is steady when you're self-employed, depending on your type of business. So I would be prepared for all of that stuff. Good credit. Yeah, good credit helps you get a lot of things, but you definitely need high enough credit to be able to get approved. I would certainly talk to your lender about what those limits are. A lot of lenders say like 640, 620 is around where you want to be able to get qualified for a mortgage. There are some other loans like FHA that you can go a lot lower than that. So again, I would just talk to your lender and figure out, what credit score that you need. Employment verification is something that they're going to need to do. They'll have to, probably reach out to your HR department, depending on where you work, and verify that you actually do work. Pre-approval is based on basically your credit score and then, of course, your debt to income ratio. When it comes to your credit score, it's called a FICO score. You've probably seen a lot of commercials online for all sorts of places to check your credit score. And then your debt to income ratio, or DTI, is what they're looking at. So basically, how much debt do you have? How much income do you have? And what's that ratio there? Now, there's a lot of types of loans out there that have different parameters on both of those things. The government-backed loans like FHA, rural development loans, VA loans, those might require lower credit scores because those loans are backed by the government, so the lenders can take a little bit more of a risk on that. When it comes to the government-backed loans and conventional loans, it's like how much money do you need to put down? And there's something called LTV, loan to value ratio, and that's basically how much money you're putting down. There's a lot of benefits to putting more money down. You can get better interest rates, things like that. If you don't have the cash to put down, you can put as little as, like rural development is zero money down. There's programs to do that. And anywhere from 0 to like 20% or more down is out there. And that's the loan to value ratio that they look at, how much you're putting down and how much is that loan to value there. And then there's conventional loans. Typically, the banks are a little more conservative because that's their money and things like that. Once your lender kind of looks at that whole picture and kind of verifies everything, they can give you what they call a pre-approval letter. And it's just a letter stating, hey, I can buy a house and I can buy a house for this much money. So when you do start writing offers for things, that letter is supplied with the offer saying, hey, I'm pre-approved. I can buy this house. I'm not just joking around. Something I thought we would touch on is if you don't get pre-approved, like if you get declined, there's a lot of great things that you can look at to help, like maybe increasing your credit score. There's a lot of things you can do around there, and there's a lot of organizations and most lenders will kind of give you some guidance on what you need to do. Because when they pull your credit, they're going to see your credit history and they can say, hey, you might want to work on paying this off, pay that off, clean this up, dispute this. There's a whole lot of things that you can do to help raise your credit score there. And then, of course, if you have a debt to income problem, they could talk to you about try to get a raise or, raise your income. And then also, like if you are able to pay off some debts, that debt to income will get get better. And they can come up with a time frame for you, like, hey, if you do all these things, we can maybe get you pre-approved in like a couple months or 6 months or a year. But at least you got a plan of attack, because owning a home is important. It's building equity. It's the American dream, so to speak. But there's a lot of great benefits to owning a home, and that way you can start working towards that. Anyway, hopefully this was helpful. Once you go through this whole process and you do get your pre-approval letter, then we can go make offers. And if you get declined, like we talked about, we can help, building that up to be able to purchase a home as soon as possible. So if you have any questions, comment below. I'd love to hear your experiences too. If you've had any of these experiences, we'd love to hear from you. Comment below as well. Remember to subscribe to the channel so you can keep learning more. And remember, if you make Maine your home, you don't have to do it alone.